Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager. Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 14th of the 7th, 2021. Time is 0445 GMT, quarter to 5 in the morning. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, Tuesday the 13th, yesterday we had a positive opposed driver in the dollar at plus 179, front and back door flows mainly coming out the euro at minus 173, out the pound at minus 90, and the yen was the positive rock at plus 84, activity plus or minus 263. Intra-week then, this is from Monday the 12th, open to about 15 minutes ago. We've got a positive opposed driver in the yen at plus 127, front and back door flows mainly coming out the euro and the pound in equal measures, minus 99, and the dollar is the positive rock at plus 71, activity plus or minus 198. So if you remember last week we had a strong yen, it then rolled over a bit, quite a bit on the Friday, so the yen got weaker. Then we had a period of weakness Monday, yen weakness, and then we're now back into yen strength. So that's where we are. Intraday then, this is the Asian session to about 15 minutes ago. We've got a positive unopposed driver in the yen at plus 38. No backdoor flows. The opposing positive flows, mainly negative flows, mainly coming out the dollar at minus 25, out the pound at minus 13, and the euro is the neutral rock at 0. Activity plus or minus 38. What's been knocking it about then? Well, we've had the Reserve Bank of New Zealand's rates decision, static, but it's all the other stuff that goes with it. They're basically shifting up their forecast for a rate increase in the cash rate excuse me, to August, which is, and we're in July now, so it's basically imminent. Today, Wednesday the 14th, we've got GBP CPI, so inflation data, and we got a CAD rates decision as well. And Thursday, the 15th, looking just over the horizon, we've got AUD employment change. So that sort of boxes us in. Right, so let's see what's been happening in the flows. Now our trades, as you know, we're shorting the NZD and we're shorting the dollar. Both of those have gone against us, and we're pretty much at break even now from a peak of 6,500. So we're sort of bumping along at break even at the moment. So we'll see where we go from here. Let's have a look then. So the euro is soft, except against the dollar and the pound. The yen is strong, except against the AUD and the NZD. The pound is soft, except against the dollar and the Swiss. The Swiss is soft, except against the dollar and the euro. The CAD is strong, except against the yen, the AUD and the NZD. The AUD is strong, except against the NZD. The NZD is strong across the board, and the dollar is weak across the board. So what have we got then? We've got dollar weakness in the Asian session. We've got New Zealand strength, and take your pick in the middle. Right, so let's have a look at the asset classes and then make some assessment of what's been going on. So let's get rid of this. And we'll start with the US dollar index. Right, so US dollar index. Now the big thing with this obviously was the CPI yesterday. Now the CPI came in pretty strong. and so you've had a big pump up in the dollar again, and it's come off slightly. Now gold didn't seem to think much of this, basically stayed put. So it's 0.43 from the high. So if this was a very sustained move in the dollar, you'd normally see gold dropping off a cliff, and gold's had a good pump as well, so it was vulnerable to a drop, and yet it didn't. Anyway, that's another issue. Oil, you've got this situation. It came off and it's now coming back slightly. Wall Street, what have we got? We've got this sort of situation. The double top below the previous resistances. It's now operating at around that sort of level. It's using the previous resistances as support, and it's below the other highs. Right. So S&P, the S&P it sort of broke. It's come back slightly. The tech, similar. Broke, come back slightly. So you're just seeing a slight retracement in the S&P and the tech, and the Wall Street is at its previous resistance. Right, where are we? US 10-year. Bear in mind we had this CPI, so you've got this this sort of situation here. So the US 10-year, it broke in terms of price, so yields came off, and it's now come back to its previous resistance. So yields have strengthened up a little bit. And the bond, which is the European equivalent, sort of looks like this. It broke there, and it's come back down. So yields are strengthening up in Europe as well, just marginally, and in the US. But it's a distorted picture. And copper, as I say, you can use copper as a good marker of how the markets have been behaving. If you look at the daily chart, as I say, it looks like an oscilloscope for someone who's just been electrocuted, and it's basically where are we? 0.43 from the floor. So that's where we are. And US steel. What have we got there? It's basically 0.40 from the floor. So commodities are soft, etc. So let's have a look what's been going on then. As I say, we're back to sort of pretty much base camp. We've got some pretty good entrenched positions which are obviously still in profit, but we've been swapping out some trades, and that's where our net losses or net break even has come from a peak of 6,500 points. Anyway, so that's where we are. So we're short USD. Excuse me, short just again. USD dollar. Right, against the euro, the pound, and the AUD. Right, and we're short the NZD against the euro, the pound, the CAD, and the AUD. Right, we've had the rates decision now, which was positive for the NZD, so it's negative for our trades. We've had the CPI there, which was positive for the dollar, which was negative for our trades. We've got the AUD in terms of negative in terms of sentiment on the COVID. So that's there as well. The pound is operating in a sort of a negative sentiment environment, and the euro is basically the tacit opposite of the dollar at the moment. So it's getting shafted down. So on balance, it's quite logical for us to be for our trades to have come in quite a bit. So that's where we are. It's where we go from here. The interesting things are, as I said, you've got the bond market, which is brought yields back a little bit on the up, but not much. Gold is having none of it, and we've got this sort of situation where the market really is undecided. If you want to look at why we're so bullish on AUD NZD. Just take a look at the 1 month chart and scroll out, and you sort of got, I don't know, it sort of looks like this. So we're operating there, and the NZD complex as a whole is overcooked. So despite the fact that you're getting all this positive noise and everybody's, you know, ooh-ah over the New Zealand dollar, it's been there and happened, and you're operating in this sort of small monthly range down here, whereas you've got this big sort of elephant here ready to go up. So that's what we're doing. Obviously it's a bit painful at the moment, but we'll just keep bashing on in our usual way. So I hope that was useful. Thanks for watching. See you again tomorrow for the daily briefing.